Hello everyone, and welcome back to Explain the Charts, your go-to channel for data-driven market analysis. Today, on October 7th, 2025, we are diving deep into Ethereum, which has been showing incredible strength, breaking past key resistance levels. The market is buzzing with activity, and there's a lot of news to unpack. In this video, we'll first cover the major headlines and events fueling this rally. Then, we will jump straight into the charts to analyze the price action across multiple timeframes, identifying key levels and potential scenarios. Let's get started. First, let's talk about the news, because the fundamental picture for Ethereum has become overwhelmingly bullish. The entire crypto market is feeling euphoric, largely because Bitcoin has just smashed through to a new all-time high, hovering around the $125,500 mark. As we know, Bitcoin often sets the tone for the market, and its strength is providing a massive tailwind for Ethereum. More specific to ETH, we're seeing an unprecedented wave of institutional money pouring in. Reports from Analytics Insight show that Ethereum ETFs have seen inflows of nearly $1.5 billion in just the last 6 trading days. This is the longest streak of inflows since these products launched and a clear signal that big money is becoming more confident in Ethereum's future. Another monumental piece of news comes from Grayscale, a giant in the asset management space. They've introduced a staking feature for their Ethereum ETFs, which is an industry first. This allows investors to earn a yield of around 3% annually on their ETF shares. Essentially, it turns a speculative asset into a yield-bearing instrument, making it vastly more attractive to a wider range of institutional investors. This move effectively cancels out the high management fees on their main trust and makes their mini trust an even more compelling investment. It's highly likely that other fund managers will be forced to follow suit, further embedding staking into the institutional landscape. Beyond ETFs, corporate treasuries are also accumulating ETH at a staggering rate. Companies like Bitmine have emerged as massive holders, with some reports suggesting they hold nearly 2% of the entire supply. This trend of institutional and corporate adoption is a powerful long-term bullish catalyst that cannot be ignored. Now, let's see how this news translates to the price action on our daily chart. Looking at the bigger picture over the last year and a half, we can see it's been a wild ride. We had a significant peak back in May of 2024 near $3,900, followed by a major corrective wave. The most dramatic point was the flash crash in early August 2024, where we saw a low near $1,900. That event marked a key bottom, and since then, the price has been grinding its way back up, forming a series of higher lows. After months of consolidation and recovery, we can see the explosive move that began in early October. The price decisively broke out of its previous range. Yesterday's candle, for October 6th, is massive, showing a powerful move with a high of nearly $4,760. This aligns perfectly with the news of the surge to over $4,700, confirming the news is directly impacting the price. The breakout occurred on significant volume, which gives the move more validity. Let's zoom in on the last couple of months to better see this recent structure. Here we can see the price action since the beginning of September. Notice how the price faced in the low $4,000s before making its move. The area between $4,100 and $4,200 acted as a firm support zone. The news reports mentioned a breakout from a descending channel into an ascending one, and we can clearly see that pattern here. The price broke above its 30-day moving average, which was around $4,330, and has not looked back since. This recent rally has now established a new rising channel. The lower boundary of this channel is currently providing support around the $4,500 to $4,600 level. The upper boundary is pointing directly towards our next major psychological target, $5,000. Switching over to the hourly chart, we can look at the price action from mid-September. This data shows the consolidation period that set the stage for the recent breakout. We can observe the price trading within a range, coiling for a bigger move. Notice the tight price action between September 17th and September 20th. This period of low volatility often precedes a period of high volatility, which is exactly what we saw unfold in the following weeks. Understanding these quiet periods is just as important as analyzing the major breakouts. Now, for the most exciting part, let's drill down into the 15-minute chart to see the anatomy of yesterday's incredible surge. Here we are looking at the price action from October 6th. The day started with buying pressure building steadily. The key breakout happened around 1300 hours Universal Time Coordinated, where the price began a steep ascent from the $4,600 level. Notice the significant spikes in volume that accompanied these large green candles. That's a sign of conviction from buyers. The momentum carried the price all the way to its peak above $4,750 around 1530 to 1630 Universal Time Coordinated. After hitting that high, the price entered a consolidation phase for the rest of the day. It has been trading in a range between roughly $4,670 and $4,720. This consolidation is healthy and expected after such a powerful move up. This new range is now the critical short-term battleground to watch. So, to recap everything, let's pull back to the daily chart and outline the key takeaways. The bullish case for Ethereum is currently very strong. We have confirmation from fundamental news with massive ETF inflows and the new staking yields. We have a strong macro tailwind from a rallying Bitcoin. And we have a powerful technical breakout on high volume. The bearish case in the short term would be a failure to hold the current levels, suggesting the recent move was a blow-off top. A break below $4,500 would be the first major warning sign for bulls. Let's define the most important price levels to watch. Our primary target and major psychological resistance is now $5,000. Immediate resistance sits at the recent high, right around $4,760. On the downside, immediate support can be found in the current consolidation range of $4,650 to $4,700. A much stronger support level lies at the previous resistance zone of $4,100 to $4,200. If we were to break below that, the next logical stop would be a retest of the $3,800 area. Now for some potential scenarios. I believe there is a high likelihood, around 70%, that we see continued consolidation in the $4,600 to $4,800 range for the next few days. This would be healthy and would build a base for the next leg up. There is a medium likelihood, let's say 50%, of a push towards the $5,000 target within the next few weeks. This would be reinforced by continued positive ETF flow data and a stable or rising Bitcoin price. Finally, there's a lower likelihood, maybe 30%, of a sharp rejection that sends us back to the $4,100 support zone. This scenario would become more probable if we see a sudden reversal in market sentiment or negative regulatory news. The key things to watch are the daily closes and the weekly ETF flow reports. As always, please remember that this content is for informational purposes only and is not financial advice. The cryptocurrency markets are extremely volatile, and you should always do your own research before making any investment decisions. Thank you for joining me today on Explain the Charts. If you found this analysis helpful, please hit the like button, subscribe, and turn on notifications so you don't miss our next update.